Oh, hello, friends. I am here at my desk and we are into early July, so summer is in full swing, and there are some really interesting things happening in the Denver real estate market and the real estate market nationally. So I thought it would be a good time to do a little market update. So I'm going to go ahead and share my screen with you, and we can go through some of this stuff and find out what it means. Okay? Okay. Okay, got the camera to the side here so I can see what I'm doing. I'm just going to go over a few graphs, graphics, PDFs, that type of thing to get the data, see what it means. So first thing I'm going to pull up here is this market overview from DMAR, Denver Metro Association of Realtors. This is something they put out every month just as a good visual representation, hitting the high points of the key stuff that's going on. So the big one here you'll see on the left is active inventory. Month over month, we are up 50%, which is very significant. I believe it is the biggest month over month jump DMAR has seen since they've been tracking the numbers. I don't know how long they've been tracking the numbers, but probably a long time. And it's also sorely needed. Many of you know, if you've been following what's going on, the reason for the market, and it's been so hot and it's really just been difficult for buyers. The reason for that is low inventory. There have been a few reasons, but essentially that's how they manifest themselves in low inventory. So to see a 50% jump from the previous month is huge. And DMAR, you see on the top here, is saying it's trending return to normalcy, which normalcy not a real word. I think we have Warren Harding to blame for that, but I digress. So that's the big one this month, and that is good news. That's good news for buyers, and it's really good news for anybody who's participating in the market, because things have been a bit crazy this year so far, and it's still going to remain a strong market, and we'll look at some of the reasons for that. But even if you're a seller, that's not necessarily a bad thing. It's just good for the overall health of the market, because what we were doing was unsustainable. You see closed homes, tons of homes are still selling. We've seen record numbers of closed homes, and that's still up about 10%. The average price is still creeping up, and median price, same thing, but not to the level that we've seen so far in 2021. I mean, under 4% on average and 1.5% on median close price, right at 545. That's including attached and detached. That's everything. But that is, I'll talk about it in a little bit. But this is kind of in line with the seasonal changes we would expect to see in a normal year in real estate. And since 2020, really going back to 2019, we haven't really had a normal year. But there's a lot of indicators that are showing that may be what's happening in 2021. Finally, average days in MLS for attached and detached is right at 10%. Houses are still selling quickly. They're still selling very quickly. The average days seems to drop every month. It's going to be zero eventually. No, but this is all good stuff. We're still seeing a very strong market here in Denver, but this big increase in active inventory is good news and big news. That's the first big sign we've seen of actual easing of the market in a few months, and we've kind of been waiting for it for a few reasons for 4 months, really. So I'm going to open up the full market report here from DMAR itself. I'll kind of expand this a little bit and go down to, let's see, that's just got the information we just saw, but okay, detached. Okay, here's residential. So here's all attached and detached stats, what we want to look at. So we were looking at active listings right over here. We're seeing June 3122. We see that big jump just over 2,000 in May. That's kind of what we were talking about. And then new listings in blue, we're seeing 7826. Look at that. That's up from 6317. So big jump on new listings too, which is following with how many actives there are obviously on the market. That makes sense. But that is good to see that number way up here. And you'll see the new listings from June of 2021 are even more from the new listings of June or July of 2020. 2020, that crazy real estate year for a number of reasons. So that is big. We are still not at a normal balanced market. We're actually nowhere near it. The reason, or one way to look at that is, okay, so our active listings, we had that big jump here in yellow up to 3122. Look at June of last year. Double, more than double what we have. So we still have a lack of inventory, and a pretty severe one on the market. So it's great to see that come up. It's great to see all these new listings, and those are the first signs of a return to normality is the word. But it's going to take us a while before we get there. So that's just something to look at. But it's good to see. But as you can see, if you look over here, we're still low on inventory. So one thing I did want to pull up is this is just one slide. Now this is maybe a bit confusing, but we're only really looking at one thing. This is from Megan Aller's report. She's works for First American Title Company. If you are involved in the Denver real estate market, you know who Megan is. She does great, really, really in-depth stats, and puts together just a lot of good numbers to help everybody put into context what's going on. What I want you to look at, so this is what we're seeing is a seasonal sell cycle. This is a few different metrics seasonally that kind of show what essentially, oh yeah, we got the averages up there, that kind of show what would happen in a normal year. Now, 2020, COVID, not a normal year. The real estate market kind of went bonkers, and 2021 thus far hasn't been incredibly normal either. But what I want you to look at is the black lines here. So the average, this is the average price appreciation or depreciation by month, and what would happen in a normal year. We're looking at 2013 to 2019, okay? And this is for detached homes, so this is for single family homes only. But what we're seeing, or what we would expect to see in a normal year, was prices to grow a lot in the spring, really slow down in June, and then actually drop by a total of about 4 to 5% from July to September. That would be in a normal year. If you look at 2020, the green line, obviously not a normal year. Up, down, crazy, sideways, all over the place. And 2021, you're seeing, it kind of went against the norm here in the spring, but you're seeing it slow down in April and May. And this is from last month, so she doesn't have June on here yet. That that report of Megan's isn't out yet, but we would expect to see a slowdown and a slight depreciation from summer into early fall. So the reason I bring this up is because those other metrics we looked at with all those new listings coming on the market, that leads me to believe that we're falling in line with a more normal cycle. So will we see prices decline from July to September? Maybe a little bit, probably not a lot. But it does look like we'll be seeing just a more reasonable, relaxed, still strong, but less crazy market. So if you're a buyer, that's good news. If you're a seller, this is still good news. This is still a very, very strong market. You're still going to have the opportunity to get the terms you want. You may not be overwhelmed with offers that first weekend, and that may be just fine. Your home may be on the market for 6 days rather than 2. Maybe, might still go for 2. Depends how the pricing goes. But what we're seeing, guys, honestly, is because realtors and sellers bought into what was happening in the spring, and you can't blame them, but with prices going bonkers, we're seeing more and more overpriced homes now. So people will say, oh, because of the inflation that was happening since late 2020, and because of the prices were rising, they'll say, oh, well, just all these homes are overpriced. Well, that's not true. If they're selling, the market is saying those are priced correctly, or a lot of them actually at that point were priced too low, because that's why they're selling well over asking price. The way to know if a home is overpriced is if it's not selling. If a home is on the market and has been for some time and it's not selling, that is an overpriced home. And we're seeing more of that happen. The good homes still go quick. Many of them still go for over asking price. The prime real estate still goes pretty crazy in this market. Like I said, it's still a very strong market, but we're seeing more and more homes just stick on the market. And a lot of them, the reason for that, most of them actually, is because they're overpriced. One more thing too, if you are someone who just bought, if you bought in the spring, or you bought in January or something like that, and you're saying, oh great, well now I just bought a place and now the market's cooling off. This is not bad news for you. Buying a home is and always has been a long-term play in terms of investment. Home ownership is the number one way by far that normal American families build wealth. And that remains true today. And when you think about the equity in your home and the appreciation, it's not really about when you buy, it's about when you sell. So the worry always, because of everything that was happening in the market, is, we're in a bubble, there's going to be another crash like 2007, 2008. Well, it's highly unlikely based on the data, and we could talk about that in a different video, but just what we've seen, that same situation is not going to happen again. But let's just say, this is what I tell people all the time, and people probably get sick of hearing me say this, but let's just say worst case scenario, we have another housing bubble, it bursts, economic recession, the whole thing, worst case scenario. Again, very unlikely, but if that happens, let's say, for example, you bought a home in 2006, right before all that went. How is the value of your home now? Probably pretty good. Probably really good when we look at some of these numbers and some of these numbers from the other reports. So that's why I say it's not so much about when you buy as it is when you sell. This is a long-term game. This is a long play, always has been, always will be. If you're smart about it and you don't freak out, even if something happens, even if prices dip a little bit in the short term or things cool, you are going to reap the benefits of the appreciation of your home. You got in the game, that's the good news, and you're going to get appreciation for years to come. And it's going to be a great long-term investment. So just looking at some more of these things, we are on average close price here. We talked about, I like to look at median more than average because the highs and lows just skew everything on average, and really it's the highs in this market, these luxury properties, $3, $4, $5 million. But median close price, June, we're up to 600,000. That's a lot. You have value in the Denver real estate market, and that's for detached, and then attached are up at 380. But you're seeing, you did see for the detached a growth from 592 in May to 600. That is a slower growth than we've seen. Like we saw a jump from March to April, 561 to 582, 530 to 561, 509 to 530, month to month before that. So you're seeing basically since January these big jumps in month to month median close price, smaller jump from May to June. Again, this goes along with that normal seasonal rhythm from the previous graph that we expect to be seeing. This goes to show that theoretically, or not theoretically, in practice, we're getting into a more balanced market. Still not there. Still got a ways to go. Sellers are still in the driver's seat, but it's good to keep an eye on this stuff. Residential close prices. Average day in MLS here. Average days, you got 8 for detached, 14 for detached. 8 for detached, 14 for attached. Even condos and townhomes are going quick. That's 2 weeks, and that's the average. Like I said, a lot of them are going in 2-3 days. I'm helping buyers with a lot of condos and townhomes right now. I'm seeing it every day. The good ones go really quickly. New listings, you're seeing that big jump in detached. You're seeing a much smaller jump, but still a considerable jump in attached from May to June. Monthly and active listings and closed homes, exactly, you're seeing both of those go up. Active listings go up, closed homes go up. There's been a lot of buyers out there who still haven't been able to get in a home. Buyer fatigue is setting in. We are into the summer, so people are worried about different things, 4th of July, baseball, vacation, all that stuff. But that's the reason we're seeing, active listings going up and closed homes going up, because some buyers are finally just able to get in the game, which is wonderful. Data snapshot, blah, blah, blah. We don't need to look at any of that. So the point is, guys, we're getting back to a more reasonable market. We're seeing the first signs of that based on the data. Is it a reasonable market? Is it a balanced market? No, we're still a ways off from that. But basically, it's good news for everybody. It's good news for buyers if you've been waiting. It's good news for sellers because, the market's still strong. And so, happy you could hang out with me and just go through this. Hopefully this was helpful. If you have any other questions, email me, call me, DM me. I am here for you. That's the whole deal. So hope your summer's going well, and we'll talk soon.